India Inc. withstood multiple headwinds from the start of the fourth quarter of FY 2021-22. If supply chain snags and soaring inflation were not enough, the Ukraine-Russia war worsened disruptions during the quarter. The street too is anticipating severe pressure on margins despite several rounds of price hikes taken across sectors. However, analysts expect Q4 performance to be resilient, aided by the economic recovery. Santosh Meena of Swastika Investmart says the Indian economy is witnessing a strong revival, evident from the all-time high GST collections in March.
As most of the economic indicators on the upswing, we can expect a good Q4 earnings session. The inflation is key talking point. However, the major impact will be seen in the next quarter because the major rise in commodity prices was seen in the month of March. Therefore, the management commentary will be very important.
Meanwhile, according to Motilal Oswal Financial Services, the Nifty has not seen much earnings downgrade so far thanks to upgrades in metals, oil and gas, and negligible impact in IT and BFSI sectors. That said, if the input cost situation does not improve and price increases become inevitable, we are not too far away from some demand dislocation and earnings downgrade even for the Nifty. Analysts too remain optimistic on India Inc. for Q4. HSBC Global, for instance, projects FY22 and FY23 headline Nifty earnings growth at 37% and 19% respectively. It further estimates FY23 Nifty 50 earnings per share growth at 18.9%. However, the brokerage has warned of high commodity costs and says a prolonged period of high commodity prices can prove to be a double whammy to corporate earnings due to decline in margins and lower demand, increasing the risk of earnings downgrade. A closer look reveals automobile and FMCG companies are among the worst hit sectors. Their high input cost worries have been persistent for the past few quarters, and the ongoing disruptions have only added to their woes. Santosh Meena of Swastika Investment expects cement, OMCs and city gas distributors to be the other laggards in Q4.
If we talk about the sectors, then commodity producer will be in the sweet spot. The metal sector may continue its strong outperformance, while the fertilizer and the sugar sector may also come out with strong earnings. Upstream companies like ONGC and Oil India may do very well amid sharp rise in crude oil prices, whereas the heavyweight Reliance may witness strong soar because it is firing on all cylinders. The earnings session will kick off with IT earnings, and there is expectation of strong performance after stellar result by Accenture. The deal pipeline looks good, pricing is improving, and the attrition rate is also stabilizing. The banking sector may continue its good performance amid strong recovery in the economy. If we talk about the real estate sector, then it may surprise the street with its strong performance despite high commodity prices. Infra companies are sitting with huge order books, and Q4 is best in terms of execution.
Against this backdrop, markets will be eyeing Q4 updates by companies on Wednesday ahead of the results season. The Reserve Bank of India will also begin its 3-day monetary policy meeting later today, which would keep equities and bond yields volatile. Globally, investors will track FOMC minutes, progress on the Ukraine-Russia negotiations, and COVID-19 cases in China.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.